George of the jungle, strong as he can be.
What do a car, a calculator, and a bushel of wheat all have in common? Well, over the course of time, they have all become less expensive to produce because of advances in technology. Well, welcome to thecreditjungle.com today. And you might be thinking, well, so what, George? What does this matter? Well, I want to show you a couple of charts that I've found here recently. One of them is from the Financial Times of London, and it shows that worldwide, across the Eurozone, the US, and everywhere else, that the pace of productivity increases has kind of plateaued, and then since the pandemic has fallen off a little bit. And there's another chart here from the US Department of Agriculture that shows the same thing. Now, what that means is, just for example, when I was in high school, the HP 12C calculator came out and it was $150. That same calculator that performs the same function, just like a car that gives you transportation, or a calculator that's some technology, or food for that matter, that as we've had productivity gains, that those items have become less expensive. And what that means is that it keeps things down on inflation. If inflation is not going to be tamped down by these gains in productivity, that means that mortgage rates might be sticking around at these higher levels for a while, and perhaps they could go up. I don't know that, but I love tying in some of these other economic things that look like they're on the perimeter, but really they come right back to our kitchen table. So I hope you don't mind me sharing some of this information. I would love to chat with you about a mortgage loan in the housing market. And thanks for coming to thecreditjungle.com today. This is George Anderson, and we'll talk to you soon.